Scrolling through TikTok or Instagram today, you'll find countless photos and videos of glamorous bloggers posing with colorful bank cards, discussing financial wellness and clever spending between sips of their $10 cappuccinos. And this is showing a trend that financial advisors and fintech brands are being forced to shake up how they interact with clients. Non-traditional sources of information and advice, such as TikTok, are becoming widely used and will continue to grow in 2022. Financial advice technology firm IntelliFlow has identified this as one of the key trends expected to impact the advice sector next year, saying that the simplicity and convenience of digitally led options are more appealing, particularly in younger audiences. And it can be seen more frequently now with fintechs as they are focusing their fight for market share and customers online, paying social media influencers to post endorsements across Instagram, YouTube, Snapchat, and TikTok. This begs the question, how will this impact the fintech sector? A study earlier this year found that 40% of Gen Zers have turned to TikTok for investment information in the past few months. TikTok's app is used by nearly 1 billion users every day, 70% whom are under 24 years old. With such a large audience, the content people share and watch is incredibly diverse. TikTok isn't just the place for dance challenges and funny videos, it's also an incredible tool for bite-sized learning and picking up life skills. As the older half of Gen Z grows up and enters the workforce, they are interested in personal finance, banking, mortgages, and even investments. If you are on these platforms, you would have seen a jump in finance content on TikTok, Instagram, and YouTube, with fintech brands joining in the action. We're also seeing fin-influencers emerge. These are influencers who focus on personal finance, money management, or investment-themed content. Finance trends regularly go viral, from money-saving challenges to crypto and investment. Cryptocurrency Dogecoin saw its value rise 40% after it went viral on TikTok. Younger users loved the meme value of Dogecoin, but didn't really know what cryptocurrencies were, with some mistakenly calling Doge a stock, highlighting a problem with uninformed influencers. However, their interest in Dogecoin gave an opportunity for brands to engage with Gen Z, whether by issuing simple explanations of crypto, blockchain, or recommending alternative investment options. Gen Z combined has over $143 billion spending power, making this segment important for financial institutions to pay attention to. Approximately 44% of Gen Zs are open to using fintechs instead of traditional brands, almost double the rate of previous generations. This shows us that Gen Z is an audience deeply interested in engaging with fintechs. Being digital natives, they are more open to relying on technology for integral services like banking. They also highlight a strong case for fintech brands to reach Gen Z on platforms such as TikTok, which is the network most heavily skewed to a younger demographic. Cultural shifts, technological advances, and consumer preferences are changing the financial advisory experience. Financial advisors must be able to meet investors where and how they want to be met, whether that means digitally, in person, or a mix of both. Plus, financial advisors are increasingly expected to accomplish more with less resources, challenging them to serve customers more efficiently. Influencer marketing has obvious appeal for fintechs. It creates brand awareness, it makes a buzz, and it may be the best advertising channel amid a lockdown. But there are downsides to the influencer strategy, and it is not always a good use of VC funds. As more is not always better, it makes less sense for fintechs focusing on profitability rather than growth, as the challenge is for fintechs to make money from the customers they already have. And a lot have worked out. It's not good business to say, go get me a customer who's going to make me very little, as having an inactive user is of no use. Secondly, these posts can also do very little for fintech's reputation, arguing that consumers don't inherently trust beauty bloggers' advice on issues like money. The topic of finance is highly personal, so the likelihood of a lifestyle influencer being a real customer or giving a true, honest opinion is extremely slim. Many of the fintech campaigns appear to be misaligned, often focusing purely on reach rather than relevance. And thirdly, it can put the influencer and in turn the fintech company under fire. While promoting fintech is generally pretty uncontroversial, it can be controversial. For example, influencers working with Klarna, a buy now, pay later fintech, have come under scrutiny for failing to flag the risks of using credit. This has started a campaign that has launched to force the UK advertising watchdog to amend the guidelines on their influencer posts about Klarna. suggesting they include warnings about getting into debt, and as fintechs grow in the sector, there will surely be more and more regulations to come. Influencers are essential to content discovery and promotion on TikTok and others. They span a diverse range of topics, including everything from cooking and beauty to personal finance and investment. For those all crucial influencer partnerships, there's a diverse range of finance influencers fintech brands can choose to work with. Gen Z's strong interest in finance topics has led to the rise of fin-fluencers, who use their videos to educate young audiences on aspects of finance. There's never been a better time for fintech brands to debut on TikTok and other social media platforms, and you can use influencers' reach to boost fintech businesses and help increase growth. But it's extremely important to make sure the influencer is aligned with the fintech business and its values. With all this being said, it should have a positive impact on the fintech industry by teaching more people about it and therefore helping it grow. And with growth comes more innovation to lead the finance sector. Do you think the use of finfluencers will be advantageous or not to the industry? Let us know your thoughts in the comments below. We'd love to hear them. If you enjoyed the video, please be sure to hit that like and subscribe button so not to miss out on more.